Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Good morning, everybody, and welcome to the Monday morning edition of the Daily Market Commentary. I am your host, Chuck Fulkerson. Hope everybody had a great weekend as we are kicking off this second week of December. For those of you that are new to the channel, do me a favor. Hit that subscribe bell so that you get the notifications as they come up. If you are not new to the channel, do me a favor, give me a comment or a like or something fun, just so that we can get that on there. So let's go ahead and roll right in. S&P. So S&P is down about 7.5 points, and we did a live trading room last night for the Traders Army subscribers. And one of the things that we talked about was that I was not, if you were so inclined, you could take a breakdown below this level. Now, that breakdown never occurred, and I was uncomfortable really doing much until the European Open. And the reason I was because I wasn't sure what we were going to do on that European Open, if we would smash up or come rumbling down. And in reality, we just did a whole lot of nothing. And now we've come back to just about the gap fill area. So we've almost filled this gap. Now, typically, when you play these gaps, you can sometimes have a gap and go scenario. But take a look at our last gap, right? This was our last Sunday gap. We gapped way up and then ran up into some supply control area and then, started to move back down. So we're coming into an area where supply is controlling demand. Somewhere up in here, we could see a bit of a reversal at this point. This is the gap fill area. Always a question at gap fill areas. I'm not totally sold on it because we're basing before the level. So I'm actually, though I have the level identified, I'm going to make it a confirmation style entry. We need to come into it and then come back out of it. I'm not sold on it because of the basing before the level. That one doesn't seem to be as highly probable for me as the levels that might be above. So, for example, in the Nasdaq, we've got the level just above that could be a bit more of a highly probable level. We already have filled the gap in the Nasdaq, and it's really just chopped sideways at that gap. So there is a potential that we could continue to run higher until we get up into that particular area. So for me, the S&P, this becomes a confirmation style entry because it's fairly weak on the arrival to the gap fill. Crude oil. So in crude oil, we were looking at crude oil last night, and we were looking at it right at this area here, and I said this becomes a candle-to-candle potential for a short. And we got one little drop away from there, and really it was just based on this price action, right? This shape of a move down followed by a small pullback. But in reality, we are in a basing sideways price action, which is very difficult trading. Tough sledding in those sideways price actions. So there's not a whole lot that I want to add to my list here on crude oil. If you are shorted off of this reversal that we talked about last night, for those of you that were in the room, then I would move your stop down a little bit to lock in some profit, or at least move it to break even. Gold. So in gold, we've come close to our 15-minute entry. This is a little 15-minute level that was identified where we had a little bit of basing, nice move up. Price has pulled back, but we've not quite gotten back into that level yet. And so gold we're just kind of holding off on at the moment to see when it gets there. It's fairly wide of an area, and remembering that it's a confirmation style entry found on a 15-minute chart means by definition it's one of our lower probability entries. The fact that we based here even more after the session that I did last evening makes me feel a little bit more confident, though, that if we do come back up to this region, we may get a decent breakout above this 1256.6. So decent opportunity there. I'd like to see basing before the level, but for a potential breakout to the upside. Looking at bonds, looking here at our bond market, we've got our reversal point right in here in the bonds. Nothing necessarily new to add in that one. In the euro, from what we identified last night, we have gotten a little bit of a bounce and started our move up. So those of you that were in the room, hopefully you caught that little bit of a move. This is the gap fill area Price came back in, touched our level, and now we've gotten a nice move up. So take your stop, move it to break even at this point. I'm okay moving the break even at a 2-to-1 reward to risk, which is definitely what we've gotten. So take your stop, move that one up to break even if indeed you were able to catch that one. And then the Canadian dollar, I stayed away from with some very volatile price action over the last couple of days. Nothing was added in the Canadian dollar. Last but certainly not least, Great British Pound, Japanese Yen. We are still sideways in the pound, waiting on Brexit news to see what happens there. And then the yen did not come anywhere near our levels. But ultimately, I just wanted to, kind of highlight this S&P, this gap fill, the fact that we're basing below it definitely makes it a bit weaker. So keep that in mind. And then that euro trade, take that stop, move it to break even. Now, this S&P could come smoking down off of this level, but I'd rather be safe than sorry, and I can always get back in a bit later if need be. So hope you guys all have an awesome trading day. If there's anything that you need, please feel free to send me an email, support@tradersarmy.com. Until tomorrow, everybody, I will see you soon. Later.